Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly discussion of weekly strategy roundtable discussion, where we talk about current market condition, pullback. Try to figure out where the bottom is and how long will the market continue to sell off, and to see what are the opportunities in the market. Before we begin, I'm going to go through specific trade ideas, so please take a look at the disclosures. They're very important. If this is the first time you see the disclosures, I encourage you to visit the link on your screen, optionscreening.com, to understand the risk associated with trading stock and options, and you can see the remaining of the disclosures. All right. Before we jump into trading psychology, let's talk about current market conditions. So we can see that market QQQ, high beta stocks, very close to 200-day moving average. Traded at the 500 level. Looks like 500 level held. Now it's trading at 505. Spiders, same thing. Close to 2 standard deviation move. Lower Bollinger Band, 580. Right, that was the December lows. 580 was close to the year-to-date lows, and that level held as well. And for now, we are bouncing back from the oversold levels. You can see QQQ trying to bounce back. Next level overhead resistance is what used to be support, right? The 510 level. So we'll see if the 510 level will or will not hold. We have initial claims. Yesterday were a little bit harder than expected, and PC data came in line with expectations. So interest rates also is not making new lows, right? Marginal new lows today at 420. So it looks like 420 December lows is a support for 10-year yield, and it's staying at the 200-day moving average. So the yield is oversold, right? The high beta stocks are oversold at 200-day moving average. Bitcoin is oversold, hit the 200-day moving average overnight session. So I think at least the first wave of the sell-off is probably close to an end. Obviously we could have a reversal. Closing today is going to be important. Monday open is going to be important, but it looks like we're getting to these levels where the market is, at least the first wave of the sell-off is probably overdone. And you can see VIX jump to 22. That's year-to-date high. So VIX at year-to-date high and now pulling back. Does it mean that the sell-off is over? Probably not, right? Probably not, because this is just usually just the first wave of the sell-off. You could have a V-shaped recovery, right, based on the tariff news, macroeconomic news. There are a lot of fear about the tariffs and inflationary pressure, or that it can cause recession. If those fears subside, in the next week or over the weekend, then potentially you could have a V-shaped recovery to 610. That's happened less often, right? Assuming that uncertainty is not going to get resolved in the next week or so, then usually there is a rebound back to the 600 level, maybe on S&P, and then wave C, right? So you have wave A, wave B. Not sure if it's over. We'll see by the closing bell today, and then wave A, B, and then the wave C. Possibly, right? That's one, most common scenario. We're probably getting to the 50-day moving average, 200-day moving average and year-to-date lows. If you look at our model, right, if we zoom out, so 10-day forecast, actually you can see for the next 10 days, this is a stock forecast toolbox model. You can find them here, and not just stocks, but ETFs, futures. You can see that for the next 10 days, it does see a rebound back to 597, 600 level. but also could get as low as year-to-date low. So I agree, next week is important. First of all, is there a continuation for this sell-off? And what the initial unemployment data looks like, what the initial claims data looks like. We have services, ISM data next week. That will, right now, the focus is shifting away from the earnings, right? NVIDIA earnings were decent. Maybe they weren't great, right? They're not, hitting a home run in terms of expectation, but they're continue to, grow revenue, bottom line, top line. And the initial reaction was market was up, and then you have a big reversal. So earnings are less important right now. Right now, it's the evaluations versus probability of recession, right? And if probability of recession goes up, then the market sells off, and when the probability of recession goes down, market goes up. So both extremes are possible. Let's look at the spiders. So it's all about, trading is about distribution of possible outcomes, right? If I look at the spiders for next Friday, right? So if I just look at what the next Friday data looks like, and March monthly expiration and April monthly expiration. If I look at one standard deviation, right, just like the model says, if you just look into March expiration, 600, right? We've seen a very large open interest at 600. So if unemployment data is positive, if the services PMI data is positive, if the tariff situation kind of mitigates, the risks are mitigated, right? Maybe not completely mitigated, then market is oversold, right? And you could reach 600 level, right, in the next few weeks. On the downside, if those risks do not resolve itself and the fear continues to accelerate, then one standard deviation is 575, 575, 75. Basically, we are revisiting year-to-date lows, which a lot of the indexes like small caps, XLK, Bitcoin, they already broke through the year-to-date lows. So those are the possible outcomes, right? And you just think about trading as, back to your statistics class, kind of bell shape distribution, right? This is your 1 sigma move, right? So we're staying in this range 70% of the time, right? 30% of the time things get worse or get much better, right? Right? If we impose, 30% tariffs on China, next week, then, you could have 2 standard deviation move, right? To the downside or to the upside, right? If, let's say, the war between Russia and Ukraine ends next week and they sign a peace agreement, then you can have 2 sigma move to the right, right? But most of the time, it will gravitate over it right now, somewhere between 580 and 590, right? So that's scenario number 1, right? The bull market continues, right? And going into the next earnings season, let's say by end of April, by end of March, maybe early April, we're breaking out and making new highs, right? That's scenario number 1. Scenario number 2, we're 70% of the time we're trading between 600 and 575, right? And scenario number 3, maybe unemployment data ticks up, maybe services data, services PMI or ISM services data continues to deteriorate. Um, retail data continues to deteriorate, and then more and more people think that recession is imminent, and scenario number 3. So this is a very useful exercise, we call it, future rehearsal exercise, where you could look at your positive scenario, right? Most people are bullish on the market, so you would say, okay, the scenario number 1, we're going back to all-time highs, right? 610, 620, 630. But then the question becomes, how much money are you willing to risk? And then you need to determine position size, and you can't really determine position size unless you consider in all 3 scenarios and how much money you're willing to invest into these scenarios. So let's take a look. Let's take a look at spiders. Okay, so scenario 1, right? We're breaking to new all-time highs, right? Going into the next earnings season, end of March, beginning of April. Scenario number 2, we're trading in this range somewhere between 610 and 575, right? 200-day moving average. And scenario number 3, we're breaking 200-day moving average, like small caps are now breaking down Bitcoin. How many of you say 1? This is just a temporary setback, and unemployment rate is low. People are still traveling, people are spending money, on Carnival Cruise and Louis Vuitton. So bull market continues, especially China is rebounding back. Manufacturing data in China, in Germany and Europe looks like it's improving. So scenario number 1. Scenario number 2, uncertainty persists. Markets don't like uncertainty. Nothing's going to get resolved in the next few weeks or months. It's going to be more of the same. So scenario number 2, we're trading in this range. And scenario number 3, signs of recession continues to increase and bond, yield continue to drop. Maybe Powell comes out and say that he's going to, start lowering rates aggressively because market conditions are deteriorating, and you have scenario number 3. Andre, 1, 2, okay, very good. Kevin, Martin, Peter. All right, most people said 2. Okay, I agree with it. We'll go with statistics. I think 70% of the time we're gonna, if it reaches 600, 610, I would be a seller in the next few weeks, maybe a month. If we reach 575, 580, like today, maybe this is the time to start thinking about buying, right? So that would be my prediction as well. What else is interesting? VIX is at year-to-date high, so uncertainty persists. People are worried. We're off the session highs, year-to-date high, but nonetheless elevated. High yield is stable, right? The difference between the treasuries and junk bonds are stable. They're tight range. They're not expanding. High, that's positive. So there's no dislocation. There's no signs of panic right now. A lot of people would argue, okay, for this sell-off to come to an end, you need capitulation. You need VIX to jump. You need to, bond market to sell off, junk bond market to sell off. I mean, sometimes it happens, sometimes it's not. So we'll see. What else? Value stocks continue to grind higher. So you can see that the value stocks are up. RSP, right? Equal weight. S&P is regaining 50-day moving average, is also up. QQQ found support at 500 level. A lot of positioning, right? We're talking about open interest and positioning. Most of it, especially this Friday expression, is at 500. It was at 510. We broke to the 510 yesterday. Now it's at 500. So it looks like, at least for now, too early to tell, but it looks like 500 level for now is holding on. Semiconductors trading extremely oversold, trading way below 200-day moving average and 2 standard deviations. Same thing could be said about small caps, right? Very sensitive to recessionary pressures. But looks like they're finding some footing. Regional banks rebounding, ARK Innovation, high beta stocks rebounding off 200-day moving average. Biggest proxy is the Bitcoin for risk taking, and Bitcoin touched 200-day moving average briefly and now back up. Nvidia hit the year-to-date low and rebounding nicely from the 116 level. And copper is also pulling back. You got a strong rally on the tariffs and better industrial data, rebound in China, and now consolidation in copper as well. Thoughts on Pelletier? Again, Pelletier is a high beta stock, right? It's AI. The good news, it's obviously consolidating, and it hit this long-term support that goes back all the way from November of last year. So that 80 level, it looks like it's holding the 80 level, but it did drop from 130, right? It's down 40%. in just a few sessions, a couple of weeks. So I think this digestion, right? We talked about AI digestion, looking at the valuations. I think that persists, right? So I don't think Palantir is going to just V-shaped recovery and gets back, but it's oversold, and it's probably going to move with the market. So I think wave A, right? Usually you think about on these sell-offs, they come in waves, right? A, B, C, sometimes A, B, C, D, E, right? Depends on the news and market conditions. But usually after such a sharp pullback, you're not going to just bounce back and make new highs. So I think it's overdone, right? We haven't had QQQ down 10%. When were we down 10% in such a short period of time? QQQ, I think back in, let's look at the weekly chart. So last pullback was in July, and in 2 weeks we pulled back 10%. Okay, so similar pullback to July, basically, right? And we had 4 weeks in a row of downward momentum, and it pulled back from top to bottom 15%. 15%. Right now we're down almost 10%, 8%, right? So back in August, right, we reached the bottom, and then you had a pretty sharp rebound. It could be similar, right? Maybe a couple more weeks of digestion. Usually March first 2 weeks could be bearish. If you look at our seasonality chart, right, from seasonality point of view, usually February could be volatile, right? And the first 2 weeks of March is also digestion period. But then once people start thinking about next earnings cycle, this is when you start breaking out. So end of March, first 2 weeks of April, assuming that recessionary pressures don't accelerate, then that usually is the bullish time of the year. But for now, for the next 2 weeks, I would expect something similar to either July pullback. I don't know when was the last time we pulled back 15% on QQQ. In 23. 23 took a little longer to digest. It was 10%. I mean, you have to go back to 22 to see these sharp 10 to 15% pullbacks. I mean, we did have one in July, but kind of came to an end. 4 weeks, 4 months. So that's my thoughts on Palantir and anything related to high beta stocks. It could be Palantir. Same thing could be said about Tesla, right? Same thing could be said about Microsoft, Amazon. I mean, chart patterns on the way down look very similar, right? They all look very similar. I mean, some stocks are better. I think Amazon is better than Tesla. Meta, is better than Tesla, but they are pulling back. Any questions? So in terms of, so we talked about seasonality, right? I also looked at spider seasonality here. I mean, February could be volatile. It was, during recession, it was pretty volatile, 22, 23. During COVID, it was extremely volatile, right? 2018, China, it was pretty volatile. I mean, March could also continue on, right? Just depends on market conditions, right? If the news flow continues to deteriorate, right? If we still have negative news in March, then that pullback, we could have a negative March as well, right? Usually only in April you start having these recoveries. But 24, 23, 22, 21, they were all positive years except, COVID, right? But even in COVID, right, it reached the bottom by that March expiration, right? So I would keep an eye now on March expiration, what happens. Going into March expiration, probably negative, but then after that, more likely than not positive. Any questions on seasonality? So that's stock forecast toolbox for 6 days, for 6 months. If you zoom out and look at the 6 months predictions. Overhead is at 620, 576. These were predictions that were posted on February 1st. So model did a good job basically saying that for the months of February, we're going to on the downside, we can potentially reach 576, and we have, right? We got close, 580. And on the upside, we also got very close. And the way I would interpret this data is that the long-term bull trend is still intact, right? As long as we're trading above 570, 575, that means going into March and April, we could continue trading higher, right? And actually in April, May, we could make new all-time highs, right? So long-term bull trend is still intact. Yield pullback, that's good. Dollar pullback, that's good. So for now, this is just a digestion period. How long it's going to continue, we'll find out. Tradier is a broker. I mean, Tradier is, we do have relationship with Tradier. Some, is a place where you can trade stock and options as well. But yeah, there are many brokerages platforms that you can consider. Any other questions? All right. So that's market conditions. Let's look at some of the services. So we talked about stock forecast toolbox. I like stock forecast toolbox because it takes emotions out of the decision. And it just basically shows you the momentum and the trends. And it gives you not only the low and the high, but also the trend. Right, and when you superimpose it with other tools, let's say gamma exposure, right? So if the gamma exposure shows you 600 strike as your key overhead resistance, and stock forecast toolbox shows you 600 level as your key overhead resistance, then if the multiple tools show you same data, then that improves the probability of that outcome, right? So that's important to keep an eye on that. And you can analyze futures, you can analyze ETFs, you can type any stock that you have, you can type in Morgan Stanley, and it'll give you similar information. We do have a company screener. We can actually see which sectors have been in strong uptrend going into the months of February. Some of the energy names, some of the industrials are in strong uptrend. Computer and software, strong uptrend. Banking, right, one of the strongest sectors right now is banks, based on this, and I agree with the model, right? So going into, keep in mind that this data is updated only on the 1st of every month, intentionally to show you what the long-term trends are. But long-term trends that financials are one of the strongest sectors right now, right? Insurance is another strong sector. Leisure is another, a strong sector in the market. We talked about seasonality, right? We have research tools. So seasonality, right? Model actually going into this week showing predicted lower trend to continue, and 66% correlation with historical moves in S&P, so which is pretty high. So if you look at average price in February versus now versus past 20 years, then actually almost 30 years, then pretty highly correlated. So end of February bearish, first couple of weeks of March, sideways, and then rally continues, end of April. So we'll see that seasonality stays. Also, we have a probability calculator, right? Basically saying that 76% probability we're going to trade between 595, 600 in the next 50 days. On the downside, 570, 575, right? So it gives you that comfort level in terms of what are the key resistance and support levels, along with our predictions, right? Along with our predictions on the trend, right? In live trading room, usually I trade these signals: active trader, weekly trader, and monthly trader. So you can see active trader there's a history of these trades. Let's see, audio. Is audio okay? Let me know if you guys can still hear me. Looks like audio is back. Okay. But progressive is one of the signals for today. Healthcare, Abbott Laboratories, Gilead Science, all of these are signals from today that basically showing that despite the stock market pullback, there are certain sectors, certain stocks are still in uptrend. And then you have a choice, right? You can buy stock, right? For active trader, the signals are meant to be last only a couple of days, so we're looking for 1% gain, right? If you want to hold it longer, then you can look for 2% gain, but these are your target gains. And I encourage you to use a stop loss of also 1% and break the entry into two, right? That's why you have entry one, entry two, basically saying, based on that, future rehearsal exercises where you look at your, the positive outcome, negative scenarios. You want to risk less than 2.5% of your portfolio, and here the gains are, you're looking for 1% gain or 1% stop loss on these trades. You can also do these trades, if you want to leverage, you can use options, right? So there's option sections. It shows you in the money options, either weekly contract, or if it doesn't have weekly, you can use monthly, but you can buy this week or next week contract in the money call, and then instead of spending $275, you buy 270 call at $5.20. Right? But it's the same thing here. You're looking for 1% move in underlying stock. In options data, that translates to $2. So that's progressive, and these are some of the signals that you can use for using either options or stocks. Weekly power trader, similar model, but the holding period is a little bit longer, right? This is where you can hold the position for a week, for 2 weeks. CME group, right? You can see CME is in strong uptrend, continues to trade higher. Again, you have a choice either buy stock or an options. Here, the stop loss target gain is 2.5%. So if you want to hold it for a week, then 2.5% is your target gain stop loss. Same thing, I would encourage you to consider to split the entry into two, so you only risk 1% of your portfolio. But in general, if you're new to trading or you're new to Tradespoon, consider starting with only 4 positions at a time and maximum exposure less than 2.5% of your portfolio, right? Especially in the volatile period. This gives you kind of a sense of what's your maximum drawdown, right? Especially if you're new, if you get caught in these sell-offs, right, which a lot of people do, right, then your maximum exposure is 10%, right? So if QQQ is down 10%, you're down 10%, and you're out. But if you have more positions and they're all high beta positions, QQQ could be down 10%, but if your portfolio down 20%, all it means is that you either have too many positions or you don't have the right position size, right? You're too aggressive. So keep a journal, right? I always encourage everybody to keep a journal, and that can help you with the risk, finding with the risk assessment. Any questions? Let's see this. I need to pause this. Okay. So these are the services. Also consider joining in Elite Circle. So these are the signals, right? And then it's up to you to decide, trading stock or options, when to enter, when to exit. If it gaps up, do I buy it? If you have these questions, right, like what if it gaps up? What if it doesn't reach that level? Usually that means that you still need to work on your trading plan and kind of build your system. So then I would encourage you to join our live trading room. Right? We have a live trading room, first hour of trading session, last hour of trading session, and in Elite Circle you can actually see all of my trades. Right, so you can go to Trader Log and see. I'm buying stocks. Right, I exit Texas Instrument pullback. I exited half of the Gilead position, so these are the stock position. And I added to my General Electric position using options. So you have a combination of both stock and option trades, right? That you can see, and you can go into SMS alerts, enter your phone number, and get a message. And also participate in live trading room. If you don't have time for live trading room, there's always the recordings, and you can see all of my orders and positions. So that's Elite Circle. They're almost daily trades. If you're just looking for option trades, you have a premium or spread portfolio where you can only trade option spreads. If you only want stocks, we have Robo Investor where there's only stock trades. Those are different portfolios that you have a choice over. Andre, BJ, Ed, Joseph, Kevin, Mark, Martin, Devendra, any questions on some of the Tradespoon services, market conditions? We do have a YouTube channel, so join us on Wednesday. We have a live broadcast on YouTube channel, and there's a lot of free content, right? We have newsletter. I encourage you to add info@tradespoon.com so you get our daily emails in the market commentary. There's a video, 5-minute video on market conditions. We publish it every Tuesday, Robo Street every Thursday, and market commentary is every Monday. Blog. So that's free content. We have, if you don't have a trading plan, or you don't know exactly, when to get in, when to get out of the trade, how much, to risk per trade, we do have learning center with different guides, right? In terms of your short-term trading plan, long-term trading plan, how to use some of our tools. That's smart trading guides. We have recordings if you want to learn about technical analysis, advanced technical analysis, options basics. We have libraries of these videos that you can help use for free and try to learn. If you are looking for one-on-one coaching program, we do have it. I encourage you to click on this link, one-on-one coaching program, and we do have one-on-one coaches. That's probably the best way to learn, right? So I encourage you to consider joining our one-on-one coaching program as well. Any questions? What else? And you can always go to dashboard to see different services and what we have, and it will explain you as well. Any questions? All right, if there are no questions, that's all I have for today. We do have a live trading room last hour, so hopefully you can join Keith last hour of today's session, or we'll see you next week. Comment on supermicrocomputer. So together with semiconductors, it's extremely oversold, right? I mean, they have their own accounting issues and other news, but it's highly correlated to the moves in the market. You can see QQQ is approaching 505, Spider is approaching 590. So whether it's a supermicrocomputer or it's a Pelletier, right, or it's NVIDIA, charts are almost identical, right? So on the way down, when there is a recession, the question becomes evaluations, and all of these companies have stretched evaluations, right? So supermicrocomputer, same opinion as NVIDIA, right? I mean, outside of their accounting issues, which could also, come and go, it's oversold, right? It's below 200-day moving average. It's extremely overdone. It did rally into the earnings on better than expected news, some of the resolution to their accounting issues. So if QQQ is going to rebound, most likely supermicrocomputer is going to rebound, most likely Microsoft will rebound, and NVIDIA. They're all going to move in high correlation to each other. But I do expect that this is not over today, right? That it's going to take a few weeks to digest this pullback. And everybody's trying to figure out where's the bottom. For now, every rally got faded by the end of the session. If today is no different, then I would say we don't know. If today we close above 500 in QQQ, if next week, Monday, Tuesday, we close above 500, I would say we're close to the bottom, right? We're probably close to the bottom. And this 10% pullback, it's maybe it's 15, maybe it's 12, but we're close. If we're gonna fade and we're gonna make new lows, we close below 500 today. That means we continue to collect the data to make that determination. All right, guys, thank you very much. Have a great day, and I will see you. Well, Keith is at 2 o'clock, and then I will see you Monday morning. Thank you.